Hello, everybody. So my name is Anya. I'm with Galaxy Digital. And I want to say that I understood the last talk on AI, user-owned AI, but to be honest, I probably understood 5% of that. So my talk is not really going to be technical. For the last 2 years, I have been selling custody infrastructure to institutions. So it's like banks, funds, exchanges. So if anybody here is building a wallet, custody, or considering buying it, then I think you would be very interested in what I have to say. So can I maybe get a show of hands of who is either building a wallet, custody, or currently maybe acquiring it? Anybody here? Okay, yeah. So it seems like it's quite a popular thing to do, right? Because people go, okay, I'm going to build a wallet. It's going to be amazing. I'm going to have like billions of dollars on it. It's actually a lot harder than you think. So I'll just talk about first, what is custody? Then I'll talk about who are the institutional players there, and then finish up with what's next. So, but maybe I'll just introduce myself first. So I got into crypto, actually not when I bought my first Bitcoin, but when I was a kid growing up in Russia, and I've experienced a period of hyperinflation. I think a lot of people who've gone through that probably thought, okay, maybe money is not as real as I think it is. So then when I came across Bitcoin, had understood that it has a fixed supply, was an immediate appeal. And then I joined Power Ledger, which a lot of people who were in ICOs really early know that name because it was one of the first ICOs to come out of Australia, and they either love it or hate it, depending on when they sold. And then for 5 years, we were building solutions for the energy sector. So I'll just quick note here, the energy sector does not want blockchain. So that's a summary of my first 5 years in that space. And then 2 years ago, I joined Galaxy. So if you haven't heard about Galaxy, we have about $7 billion on platform crypto. We're really an asset manager, where we infrastructure provider, and then trading desk as well. So we do things like Bitcoin, Ethereum ETFs. We have active passive investment fund. We also have a large hedge fund, VC fund. On the trading side of things, we work with about 1,300 institutional players. So we're one of the largest spot trading crypto desks globally. And then on the infrastructure side, we actually run data centers. So it used to be a large Bitcoin mining facility out of Texas with about 800 megawatt capacity there. And we have recently converted that to AI needs, because that's obviously hugely booming space. And about 2 years ago, Galaxy acquired a company called GK8, which came out of Israel. So you'll find that a lot of custody infrastructure does come out of Israel. So why is that? Just has a very strong cybersecurity training school. So fun fact, when I joined, I flew to Israel to just meet other people who are there, and we were going around the table. People were saying, like, my name is such and such, I come from this unit in the military, this intelligence unit, or my name is such and such. I've been doing this kind of deep tech development, and I was like, okay, well, my name is Anya, I really like yoga. I have literally no intelligence or military training whatsoever. So GK8 was really built because we understood that there was no solution that can safeguard billions of dollars worth of value. And you think that maybe there is no difference between millions and billions, but it really comes down to return on investment for hackers, right? So if they can apply themselves and throw resources at a wallet that contains billions of dollars worth of value, they potentially can hack it. So just a really quick overview of how the custody progressed. So I don't know how many people remember like my Ether wallet, probably a few, right? So we had one private key that's always online, so that's a hot private key. And then we've had iterations of that. We got things like MetaMask. I remember when that came on, that was pretty exciting. So the browser extension allows you to access things, access DeFi. So that's also just one key that's always online. And then obviously we had a progression into hardware devices like Ledger or Trezor. So that's offline up until the point you actually plug it in. When you plug it in and you need to create a transaction, you need to sign a transaction, it also becomes like a hot key. And then, of course, there were multiple iterations after that where people thought, okay, if I have multiple keys or if I split the key, I'm going to be safer. So Bitcoin has a multi-sig, a native multi-sig, which basically requires several people to sign on a transaction. And then an iteration of that is an MPC, which is a multi-party computation where you take one private key and you separate it into different pieces, Like, people don't like the word pieces, they say shard, that sounds a lot cooler. So when I was trying to explain all of that to my mom, she was like, just, what do you do again? And of course, that's amazing, right? So we're solving for the key management side of things, private key security. But that's not enough anymore, definitely not enough for banks, custodians, exchanges, right? So multi-sig, we've had examples of massive hacks, like with Bybit, 1.5 billion got stolen. And also, what do banks use now? They use HSM. They've been using that forever. That's a hardware security module. HSM does a really great job of protecting the private key physically. So if someone's trying to extract the private key, there are usually different things in there that either melt the chip that the private key is on or basically prevents you from being able to extract it. But it doesn't protect you from other types of attack, like replacing the address of a recipient, for example. So you can direct the funds and they might go elsewhere. So that's a very quick kind of custody wallets 101. And then I want to talk about what do people actually want? Because when I first joined 2 years ago, I just started talking to any institutional player. And banks especially, they want to get into the space. They have very established custody teams, which was news to me. But they've been custodying cash, equities, things like that forever. And they have the same people who've been doing that are now being asked to custody digital assets, and they have no idea how to do that. So they want something that's highly secure. They want something that is offline, something that they control, and at the same time, it has to feed into the systems they already use, such as their core banking systems, such as governance layer and policy, right? So that's banks. And I feel like right now, behind the scenes, there is just a massive wave of adoption coming, right? Because there is already some banks that we know that have retail crypto product, right? So we have Zucker Cantonal Bank in Switzerland, we have Post Finance in Switzerland, banks in Brazil already have a crypto offering. A lot of others are coming into the space. They're not really that interested in crypto, but they are preparing for tokenized securities. So tokenized money market funds, tokenized debt. And they know that if they start playing around with Bitcoin, Ethereum, that's going to position them really well. They will be able to iron out any kind of little details that they need to iron out in their operating systems. And I feel like, once we have BNY Mellon, Fidelity, State Street offering crypto and people can log in, they can have their equities, their fiat, and their crypto, that's going to be a very tough time for traditional crypto custodians, right? So the biggest custodians out there is Coinbase, BitCo, Anchorage, Zodia. They've done a really good job of providing a custody service, and they will be competing very aggressively with the banks entering the space. And then, of course, we have exchanges, right? So that's kind of where a lot of the high-profile hacks are occurring. So they also really value security, but then they need a scalability. So they need an ability to spin up millions of addresses, like in a very short notice. So, and they need to have an ability to provide deposit addresses for their clients. So the slightly different use cases, right? One is more of a treasury use case. I just have a lot of digital assets that are sitting here. They're not really moving much. To I have a lot of clients depositing, withdrawing funds. I need to be able to do this quickly. I need to be able to sweep deposits into a single omnibus account. I need to do that efficiently and cheaply. And then we have, of course, VCs. They also hold a lot of crypto. They have a completely different requirement once again. They're getting into projects very early, so they're looking for very quick support. So if you're servicing VCs, you need to be able to, right, there is this new project, I'm adding support for it today. And that's how you get that crowd, right? And then we have trading desks. So as I mentioned, Galaxy has a very large trading desk. They have, again, what do they want? They want to be able to trade. They want to be able to do borrowing and lending, but without being exposed to counterparty risk. So of course, that's on the back of FTX. Everybody's like, well, I don't want to be depositing things to an exchange. And a number of providers out there has attempted to solve that, right? So we have Fireblocks, Copper Clearloop, Ledger. They are providing the settlement networks. But interestingly, I talk to people about those settlement networks. They all operate slightly differently, and you can't quite fully understand actually what's going on. I think if you're considering using one of those, if you work for a financial institution or a bank, you really got to say, am I actually eliminating counterparty risk? Or am I just passing that on to this other provider. So what happens when everybody goes bankrupt? Do I still get my money back? And then DeFi funds, what they want things really cheap, they want things really fast, and they want, of course, an ability to deploy funds into the DeFi ecosystem when the market conditions are right. They make money when the funds are deployed. So what they really care about is, can I connect to Solana DeFi? Can I connect to DeFi on various EVM chains? So I guess my first suggestion for anybody who's getting into this space is to identify who are you building a solution for. Because if you're trying to build for all of these different functionalities, you're going to have an enormous engineering team, and you probably won't appeal to anybody. So you need to go, right, I'm doing this for, like in GK8, our main customer is banks. That's who we decided to target. We also have other major clients, but we really built everything that a bank might want. So that's things like Active Directory that you've probably never heard of, but that's what banks use to manage various users, to add, remove users. We've built things like a very comprehensive policy engine, which allows you to set things like daily, weekly, monthly limits on spend, which allows you to manage your users, set up workflows in a very granular level. This is actually, might sound quite boring, but it's absolutely essential for people to be able to say that they have the same control over digital assets that they have over traditional assets. Over the last month, I would say there is at least 10 tenders that came out from European banks that are on this, quietly, but very confidently looking for custody solutions. So that means that in the next, towards the end of this year, we're really going to see a lot of announcements about banks having selected a custody infrastructure partner. And for them, the decision is also, well, there's multiple decisions. First of all, do I do digital assets at all? Do I do crypto, or do I do tokenized assets? For most of them, it's like tokenized securities. Then, do I build things in-house? I have to hire an engineering team. Do I partner with the custodian, an external custodian, like a traditional crypto custodian? Well, we're not sure if we trust them. Or do I own my own infrastructure, set it up internally, and then connect it to everything I have through a set of APIs? And another kind of things that I wanted to talk about is, where is this whole space heading next? So a lot of the requests that I'm getting right now is for integrations with all the other service providers that are in the space, such as Chainalysis for ability to control and view and identify potentially malicious transactions, to things like Chainlink that helps you do proof of reserves for your stable coin or whatever that might be, to even things like CashLink, which is a German company that helps you maintain two sets of registries, right? An on-chain registry that's also linked to an off-chain registry that a German government recognizes. I think this is absolutely a fascinating space. It's evolving really quickly. And to just wrap this up, I wanted to talk about a couple of projects that we are directly involved in, just to give you a sense of like a variety of opportunities in this space. So Galaxy Flow Traders and DWS, which is an asset management side of Deutsche Bank, have come together to form a joint venture to issue a euro-backed stablecoin, right? So that's something that is obviously trying to make sure that we have the right kind of stablecoins for Europe, and that also requires a lot of the functionality that I have described earlier. Another thing we're doing is we're working with a large European bank to prepare for a retail crypto offering. So that's setting up a very scalable system for them that's also connected to various liquidity providers, where people can come in, to the online banking portal that they're very familiar with, and be able to buy, sell crypto, and hopefully towards the end of the year even stake it, right? And then we're working with a very large US bank to help them bring a tokenized money market fund to their users. So these are kind of examples that are pretty big examples of what's happening in institutional space right now, that kind of spans the whole custody, tokenization, staking, integration side of things. And if you have any questions, this is now a really good time to do this. Oh, thanks.
Thank you. Very informative presentation. Very well structured, helping me and I guess everyone understand more about the space. I'm just interested. What do you think, like based on what you were saying about custody and, securing assets, and not only securities, not only tokenized securities, but like digital assets, traditional native crypto assets, and then managing those assets on chain. Like for example, in an asset management infrastructure on chain. Like what are the biggest blocks you see in the space for institutions to actually like going on chain and participating with assets that are actually managed by smart contracts on chain? Like how is this going to happen, do you think? And will it happen at all, like maybe in the next 2-3 years?
Well, I mean, I certainly hope it would happen, but to be honest, this is so far in anybody's mind right now. They really come into terms with what is custody. So, okay, I have to protect my private keys, right? So how do I also integrate it to my existing systems? How do I train my people? Like when I bring up something like staking, for most institutions, it's something completely amazing, out there, crazy, that maybe they'll do one day. I've brought up DeFi in conversations. People just look at me like I'm crazy, or they laugh, or they don't understand what it is. Especially when it comes to public chains. I think the adoption really is coming from the funds and definitely not publicly traded institutions. Any other questions? No? Well, thank you. I appreciate it.